All right, guys. So now we're getting into a lot more complex stuff in terms of market flow and liquidity. The markets move because there's two sides to each individual order or each individual trade or each individual execution. When someone's buying, another participant is selling. And with that, you can project the order flow and liquidity when you can read price in the correct way. Take your time with this episode. It's going to be long and it's going to be very, very thorough. But once you get your head around it, you really are now beginning to level up. Yes, guys. Welcome back. So very, very, very important episode. All these episodes are important, but this one is something that really will set you apart once you get your head around it, okay? This ties into quite a lot, all right? And like I said, as we go further into these episodes and as we've gone further and things are going to get a little bit more complex, take your time, don't stress. It takes a long time to get your head around, all right? But I'm going to just do a little drawing up here first, okay? So the market moves because there's a market for it, all right? It's why by market, I mean people are buying and selling this asset, okay? As a retail trader or as a real retail participant, you're able to enter in and partake, all right? But there's a whole, it's like a war, there's a battle going on between the buyers and the sellers, all right? And we just kind of jump into the war. I like to kind of explain it like surfers, okay? The market's moved by the big money, right? And it creates waves and waves and waves. We retail traders are like the little surfers, yeah? And it's our job to catch the waves and try and catch the waves. And, you know, you're going to crash, you're going to burn sometimes, but it is what it is. And it's our job as surfers to get as experienced as we can within the water, understand the currents, understand the tides, and catch as many amazing waves as possible and hold them for as long as possible. And that's the journey. All right. But the journey of the markets, if there is within the markets, there's liquidity. All right. And due to different context, which is why I always talk about context. So due to the different sort of environment you're in within the market, there's different levels and like pockets of liquidity that gets targeted by price in order for the market to move. Support and resistance. The reason why price goes to support and to resistance and why it moves in that structured way and why we're able to actually do analysis to be able to anticipate where price is going is because of liquidity. All right. Because, you know, if the vast majority of the market's bought, they all need to sell the asset. And in order to sell the asset, people need to be buying the asset back from the sellers. So let me do this drawing so we can explain this visually, right? Okay. So we have support, resistance, and then we have support. All right. Here, below support, if you click a buy order, if somebody's going to buy here, okay, let me do another nice little one. Somebody's going to buy, okay. What would the market participants do around here if they bought? Okay, so maybe they might have a stop loss. So it's a stop loss, which is a sell order. Okay. So traditionally, not always, but traditionally people buy cheap and they sell high. So if you're going to sell, we'd sell here. Okay. Or we would have a stop loss in the form of a buy order. Okay. So buy order. All right. And you got to think about this deeply and you got to go and see this for yourself. Okay. So people buy here, right? The market's moved up. Yeah. Here, they will, traders will sell their buy order. And then obviously some traders will be buying here because people view the markets differently. But if you've bought here and you sell there, somebody has to be buying there. Okay. That's the way it works. It's not just like it's not a game. All right. There's somebody on the other side of your order always. That's why you see the order book on exchanges. And that's the way the markets move. So it moves in liquidity. All right. And you know, we spoke about there's a little bit on manipulation in the top down analysis, but we're going to go into it a little bit more detail now. But if you're looking to take a position from here and the market stabs lower, this is why we spoke about double bottoms, all right? The reason why, if you read the vast majority of textbooks, yeah, they're going to show you that if you form a double bottom, that is now an invalid double bottom. That's what they'll tell you, okay? So they'll say the secondary test needs to be higher than that test because it validates that level. That's not true, okay? It's not true, because what do you need in order for the market to move higher? What do you need as a buy order in order for the market to move higher? You need sell side, you need sell liquidity. And where's the sell liquidity? Here. Okay, so that's why you see these movements lower and exceeding these key price points before moving higher, because the big participants, the big players, yeah, they know where the liquidity is. And not only do they not know where the liquidity is, all right, the market seeks it out anyway because it needs to. So it's not even like a tinfoil hat thing, yeah? It's not even necessarily that, oh, people are moving the markets. No, the markets just need that liquidity. It's what's necessary in order for price to move. Same on the sell side, all right? Say, for example, you have, let's move this over so we can explain this nicely, all right? You get double tops and you get these stabs through, and then all of a sudden, this is what we talk about being offside. Why do you think you see that? Why do you think that you see these amazing levels that we've done the analysis on, and then you get these big stabs through, and then all of a sudden, whoop? Well, that's because in order for the market to sell off, it needs the opposite side liquidity, and you get that from the likes of buy orders, people buying breakouts. What do people do in the market, guys? What do people do in the market, yeah, when price starts to break up a high point? What do they all start buying and trying to chase the market. Yeah, it's so, understand it, it's the losers. It really is the losers. It's the losers in the market. All right, price is now broken out of an all-time high. What are we going to do now? We're all going to start buying. Whoop, there goes price. Or people have too tight stop losses, yeah, around here. What happens? Boom, price sinks. Okay, this is what liquidity is, all right? I'm going to show this on the charts now, okay? You need to understand it. You need to be able to see it. And that's why you have these targets. You have these stabs. One really, really nice sort of pattern and formation that you see quite often is like three, people call it different things, like the three soldiers. And it's like that sort of stabby formation before you sell off. And obviously as well, it can be like a head and shoulders formation eventually as well. But it's the constant pushes and the pushes and the pushes higher in order to seek the liquidity to move price in the direction it wants to go. We've seen it. One really good case for it is up here, right? Notice that there's always an end point, an end game, and an end price point. But understand this one, for example, yeah? We had a stab higher, and then we had a stab. What do you think a lot of the market participants are doing at this price point? Bitcoin's at all-time high. Oh my God, Bitcoin's going to go to 200K, blah, 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 blah. What happens then? The market completely sinks off. But the market, it's not just able to do so. It needs the liquidity on the other side in order to sell their Bitcoin. So there has to be another participant in order to do that. So there was so much liquidity on the buy side up here in order to send prices lower. Okay, same down here. All right, look, we're doing this based on the really, really extreme points. What's under here? This is one of the best examples in price, actually. You've got this really key level there of support being respected. What happens before the market decides to go off? We have that huge deviation. This is why I always say deviations and reclaims are so key. Deviations and reclaims are so key. And by deviation, we mean this. If a level is deviated, yeah, we will see something like this. Boom, 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 whoop, boom, boom, boom. And what else does that form? Oh, an inverted head and shoulders. So yeah, this is where things all start to match up. You have the respective levels, then you have the deviations, and then this is like the head and the shoulders and so on and so. This is where price. This is the psychology around price now. So now you're literally graduating from a guy that just reads patterns on a screen to a person that understands, and a trader that really understands what's going on beneath the surface and what's going on beneath the veil. All right, so it's so important to understand this stuff. Yeah, so this is why we talk about this. All of this technical mastery, this part of the course is all to do with being able to bridge the gap between what the markets are printing and what is being printed by the markets, like who's printing and why it's printing, and then just being able to analyze it. There's a very big difference between understanding what support and resistance is and understanding what might happen at support and resistance due to market context and so on and so forth. So what we have here is this, okay? We've had a nice sell-off into this zone, all right? What do you think happened at this price point here? Yeah, we spoke about this a little bit in previous. We're going to go into this one as well again. What do you think happened at that price point? Yeah, let's zoom in actually. Let's go right in, okay? You are a participant in Bitcoin. We've just had a huge bear market, yeah, terrifying stuff. How many people do you reckon sold off the back of that? So many. But what happened? The liquidity was found within the market to send prices higher. Simple as that. Okay? Liquidity. Understand it. You need to understand. You need to be able to dissect it. You need to be able to read it because it is so important and you see it all the time. And it's also like damage control. All right? It's also damage control. Here again, right? Look, bang. Great example. Let's zoom into this section here. Okay, daily time frame. All right, and we can understand this, right? So let's break this down a little bit more. All right, so what's here? Sell orders in the form of stop losses, and oh my god, sorry, stop losses and selling breakouts. This is called being trapped offside. You see this level of support, okay? We're at say none of this price action was here, okay? We're at extremely high prices. What we've just had a very negative looking print of a bearish candlestick, shooting star, further sell-offs, another sell-off, breaking key support, all right? The vast majority of the market, because they don't understand what the real context is, and because they don't understand where the price is really going, what do? They sell, okay? But what happens? The big guys with all the liquidity and all the capital, they take all of that and they snatch it and they send prices higher, okay? So say if this is the lesson in this. There's a lesson in all of this stuff. And you can go through, what you guys need to do is go through the markets and see this, right? Because it's so important that you're able to position yourself correctly. Me, personally, what would I have done in this position? I'd have understood this, okay? And I'd have known right now, on a minute, that's maybe we may sell off, but nah, the overarching bias is bullish, okay? You know, we were analyzing at this point, actually, at Crypto, and we understood that there's more of a willingness for the market to go higher. Right now in this context, 26th of January, we have ETFs, loads of inflows. The macro is positive for further continuation. Yes, market mechanics and so on and so forth may be a little bit overheated, but we are in a bull market. There's positive sentiment. So to the people that really understand everything, that should not be so convincing. If you have a macro top-down analytical approach, especially if we do this and we go to the weekly time frame. Oh, look, what happens? If we'd have held for the week, okay, if we'd have held off for the week, we have a relatively strong bullish candlestick there. And then what happens after? Boom, price goes absolutely ballistic to the upside, okay? So that's what you need to understand. That is just grabbing the liquidity in order to send the prices higher, because what lies beneath this support? What lies beneath here? Sell actions. What do buyers need, and what does the market need in order to be able to facilitate enough buys to send prices higher? It needs sell actions as the counterparty to their buy orders, which is why you've seen that move to the upside. All right, does that make sense? I hope it does. Take your time with this. Here's another example. Anyway, a little bit different. Context here wasn't actually so set in stone. All right, it really wasn't so set in stone. Look at this. So we have a key level of support, of resistance. What happens? We have that. We always speak about this in the top-down analysis and the manipulation kind of style stuff. But we have this push up to the upside, and then what happens? Whoop, snatches the liquidity that lies above here in the form of buy orders. How many people do you think got excited and jumped in, like we spoke about in the last episode, in the other episode? And then boom, it was immediately sent down, and we kind of just sold off. So, like, look, you can identify these pockets of liquidity. All right. And that's why now going into current context, we had our charts laid out. Okay. We understood where we are. Now we need to think to ourselves, okay, what does the market need? Why can we target here? Well, because liquidity flows. We understand how liquidity flows. The market needs to seek this for liquidity, and then so on and so forth. And and then once that breaks higher, okay, why do we target support? Why would we anticipate the market to come back down and test this? Why, whenever I say, and whenever we talk about, we need breaks and retests? Well, because we need liquidity. So we target support, we target key price points, and then we can use that liquidity to go higher. That's the thesis behind it. That's the aim of the game. That's the market psychology. That's what lies beneath all of this price action that we analyze. Okay. That's what it means. That's what it means to be able to understand all this stuff. Yeah. So take your time with it. It's not easy stuff. You should really, really, really take it to, like, this is where you begin to start to separate yourself. Here's a really cool example as well, actually, on the other side, on the other flip coin. And this is why being patient is so important. So say, for example, you have this little support that's been formed. It's funny. It's literally so clear as day. What's here? Buy actions. By the way, this is a significant sell-off. From the top point to the down point, we had a 20% sell-off in a bull market. Relatively a pretty solid move that to the downside. So we have buy actions. What does the sell side need in order for the buy act? This is the best example ever, right? Sorry. Let me just actually look at this properly. Look. So let's make that blue. Okay. Let's make this blue. So the blue is the liquidity, the yellow is the levels of resistance or support. What do we need in order for price to go to sell off significantly? We need buy actions. What do we have there? Buy actions. And then look how the market moves in liquidity. So maybe there wasn't enough demand at this price point to send prices higher beyond this price point at this given time within this given market context. So what happened? Price was snatched and it was sold off. And then where did price seek in order to find that liquidity to go higher? Well, think about context, tell the story. What happens? We have a sell-off, shooting star, another sell-off, price sinks, boom, another sell-off, breaking even this little intraday support here. Probably shook out quite a lot of small money, retail, dumb money on the wrong side. And then that was reiterated again by here. Negative. If you don't understand what price action is, negative. Oh my days, I'm going to sell. What happens? The market finds the liquidity to send prices higher. Literally so beautiful when you do the analysis and you see it all play out like this. And how do we position ourselves? Well, what have we learned here? Well, let me show you quickly. All right. Let's be on the wrong side of the fence quickly. Yeah. Let's be on the wrong side of the fence. So if we go into, I'm just trying to do it so it doesn't send us off too quickly. So if we were on the hour time frame, yeah, a lot of people may have seen this as a breakout and they may have tried to capture the move. So they may have bought, buy, or maybe they may have stop losses in and around this piece. Look, there's no surprise there would be stop losses around here, which would be in the form of buy orders for a sell order. And look, that's where they've snatched the liquidity from. So people have jumped in to buy on the lower time frames. This is why it's important to be on the higher time frames. And they've snatched the liquidity and they've pushed it lower. And then now, okay, so let's, this is what it looks like to be wrong and the wrong side of the fence. All right. So we've seen all this negative price action, huge sell off. And now we're going lower and we're going deeper and we're sold off and now we're below support. And now this looks really nasty. All right. But what's all around here? Our beautiful buy side liquidity, our buy liquidity in order to send prices higher. And what happens? The market is snatched. So how do we mitigate damage? All we have to do, guys, is zoom out, relax, stop trying to take from the markets and just allow price to do its thing. Allow us to see a clearer sign. If we miss a move, but we protect capital and we've protected ourselves from a negative psychological damage due to a loss, and we've protected our capital and now we're safe and now we understand the context better. You have no idea how powerful it is to sit on the fence, yeah, because we're unsure of something that doesn't make sense. That doesn't make sense. That does not make sense for price to sell off there. Well, it does in ways, but it doesn't when if you've done all your analysis and you're looking bullish and you're seeing this price, all you have to do is zoom out and not try and take from the markets. You're saving yourself from damage control psychologically and from a capital point of view, and you're able to position yourselves and be more confident in further potential moves to the upside.
Does that make sense? This is probably the best example we could find of liquidity being used in the market in order to send prices to where it needs to go. Right there, after that stretched move to the upside, yeah, we didn't have enough demand in order to send prices higher. So what happened? Price sold off. It used the liquidity there on the buy side. A lot of profit taking would have happened, of course, normal sort of supply and demand, but also then price was pushed lower. We found the liquidity there and the price was moved to the upside. All right. Bit of an intense episode for you there, guys. But listen, this is where you start to separate yourself and go off. You'll see this everywhere. Even here, you could even argue is a little bit of a liquidity snatch there, to be honest. Like you have that little bit of support. You have that sell-off, break support, and then price continues higher. Okay. So now we can kind of position ourselves in a way where, right, okay, if price does come back down to here, okay, and people start to do the opposite action, we may see an opportunity coming up from here. This is what we spoke about in the top-down analysis episode. All right. Great stuff. Take your time with this episode, rewatch it over and over again, go and practice in your charts. You'll thank yourself for it. Thanks guys for watching, and I'll see you in the next episode. All right, guys. So in terms of structure and TA, you really are beginning to graduate now. This episode you've just gone through, market flow and liquidity, is so important. You're doing really, really well. Now we're going to go into a little bit more advanced stuff, even on what we've already done already. So just take your time, make sure you understand the concepts you've gone through already before you move on to the next one.